Nick. It's very good to see you. Today we're doing kind of a 2022 market outlook, but also how to weather any market correction, which is really important right now because we knew already this was going to be a turnaround year, right? Following the stimulus and rally of 2020 and 2021. And doing any kind of outlook is not about predicting, but preparing. Brookstone CIO Mark Diorio has already said we should expect volatility and a correction, perhaps even an echo bear market, which sounds a little bit scary. What are your thoughts on this?
Right. And when you have that kind of free money that comes in 2020 and
Yeah.
2021 into the markets that the Fed have been pumping in here over the last couple of years, you're going to see some of these trailing months where you start to get a little bit more volatility. And volatility is not always a bad thing. You just have to be able to manage that. And we talked about this in a couple of videos ago, the difference between passive and active investing. And you want to, ride the long term, of a bull market, but you also want to be prepared for what's coming in the future. And active investing paired with, that long term passive investing is a good way of doing that. So that's something that we've been watching. We've been monitoring it here, lately in 2022. Obviously, is getting off to a bad start in the markets. We want to be able to minimize that risk as much as possible.
That's right. And so you just mentioned it, the volatility that we've seen already, and that's in part because the Fed has said that they'll be raising interest rates, and monetary policy is a key driver of asset prices so inflation doesn't run away. Are there any specific risk-reducing assets I should consider?
Yeah, absolutely. And right now, it's not so much that we think that the market or the Fed's going to be raising interest rates. It's when are they going to be raising them and
Right.
how much they're going to be raising them at this point in time. And there's definitely some things that we can do. That traditional 60-40 type portfolio and trying to take some risk off the table with bonds doesn't necessarily come into play, at this point. When they start to raise interest rates, those bond values start to take a hit. So we look at other alternatives. Whether that's hedged equities or structured notes, different positions that can be able to lower that risk altogether. We look at some private equity, positions as well for individual clients, and how we can put together a portfolio that can minimize that interest rate risk going forward.
Okay. There's one more thing that I wanted to show you because I think that this was really interesting. This is basically a graph from 2020 when we were all at the tippy top of the market, feeling really euphoric. And then, as you know, during market downturns, people tend to panic and sell. Where do you think we are on this graph, and what do we need to keep in mind?
Right. So I think we're somewhere in the middle, somewhere in the denial to fear to desperation part of this. But people don't understand, the full bear market cycle of a market. So it's one of those things that it tends to lead into panic selling. And panic selling can be at the worst timing for a lot of people. Because they just feel they can't do this anymore, or they don't want to go through another 2008. There's things that can happen. We can, do things to minimize risk and get a portfolio to not take, severe drawdowns without going through a panic selling. We have to look at a long-term outlook, for a majority of the assets, and look at some short-term preparation of what we can do over the next 1 to 5 years and minimize that risk for income that's needed in the short term.
Right. And I know that in your many talks with Mark Diorio as well, he has said that the recovery could happen very quickly. So more of a risk if you pull out at the wrong time.
Absolutely. Yeah. Some of the best market days happen shortly after, the markets have fallen. We saw that back in 2020. The markets rallied there April, May, June, July, very quickly. So if people got into a panic sell there in March and stayed on the sidelines, they missed out on that rally that happened very quickly.
Yeah, important to keep that in mind. Nick, if somebody has any questions about all of this or any other assets they should consider as investors, what's the best way to reach you?
Absolutely. So you can reach us, our emails there, or our websites there at the bottom of the screen, iconberryretirement.com. You can also find our phone number, 937-498-1128, and schedule an appointment with us. It's a no hassle, free consultation that we can get together and just discuss preliminary, where things are at, in your life.
So important. All right, Nick, thank you.
Thank you.